And so it says here, meanwhile, $1.57 billion in tokenized real world assets already lives on XRPL. The infrastructure is here. The yield layer wasn't. Soon, period.
I think by now it's clear that for every financial institution, it's important to have stablecoin rails ready to be, executed once we have a more mature framework worldwide, and the technology is already available. It's a matter of, testing, understanding a little better the nuances behind blockchain rails, and understand how you can actually apply those rails and technology over your legacy. So right now, I think it's racing among the banks for those who will actually comprehend better what this new technology is all about.
Alrighty, everybody, what is going on? Welcome back to another podcast. We're going to go ahead and we're going to kick it off and get started because I have some absolute juice to share with you all. We'll go ahead, we'll dive into that. In the first portion of today's video breakdown, I'm going to share some video clips and just show you guys how we are at the forefront of a massive influctuation of institutional capital allocated to the digital asset space. We're going to confirm that via some new announcements that have recently broken this past week, giving you guys some insights from these institutional perspectives, these panelists, these people from these systemically important organizations, these large banks, these fintechs, these blockchain firms that go relatively unnoticed. And then second, we'll tap into, obviously, of course, lending, borrowing, DeFi developments on the XRPL. With that being said, let's dive in. First, I want to play this video clip that I posted back at the beginning of April. This is Lauren Believe, and this is going to set the tone for the institutional adoption mindset that we're seeing right now in the digital asset ecosystem, where I said here, in the first quarter of 2026, stablecoins moved more monthly volume than ACH payments for the first time. That matters because ACH is not the niche rail. It is one of the core systems behind payroll, bill pay, and bank-to-bank money movement in the US. So think about that. Stablecoins in the first quarter of this year moved more money than ACH payments. That is a huge wake-up sign that we are moving into this new digital era of digital currencies, embedded finance, 24/7, 365, always on environment. Take a second and listen to Lauren Believe from Ripple talk about this.
Left off. I think the narrative that has come around is that it is a zero-sum issue, and that's really not the case. And so I want to zoom out to the macro level here. How does the movie end? The movie ends, and I think it's specific from the Ripple perspective. Ripple is a 13-year-old company. We're mature in the crypto asset space. We build digital asset infrastructure for B2B platforms. So our banks are institutions. They're financial institutions. They're big banks. They're fintechs. They're governments. They're corporations. And we have a whole suite of products for them. We do cross-border payments. We allow for custody. We have a prime brokerage that manages trading, both crypto and traditional finance, as well as doing some treasury and liquidity management. But one of the crown jewels of our stack for clients is we've launched our own RLUSD stablecoin. And it's a really great opportunity for traditional finance to take advantage of the stablecoin and the rails that they work. It's 24-hour, it's instant settlements. There's great collateral against stablecoins, and it's an immediate kind of liquidity that banks can use that's a cash equivalent. So that it's not going to be a big bang theory overnight. And I think there were some really consequential blockers: the lack of knowledge, the lack of access to stablecoins, and frankly, the lack of regulatory certainty, which we now have with the Genius Act. And because all of those blockers have been coming down, we are starting to see traditional finance truly come to the table. And at first it is retail payment processing, cross-border payments, but as soon as people can see that this will also be good collateral for their cash equivalents and their bottom line, you're going to have a real moment where traditional finance, and how the movie ends, is it's going to be integrated very seamlessly into not just what big banks are using for their business, but how the end user is affected. And so what's happening right now, I think, is in a moment in time. But if we start looking at the scale of how stablecoins is going to be integrated, it will be prudent for traditional finance to come to the table and want to give these benefits to their consumers. So really exciting opportunity.
So she just went on to say at a Future of Finance Summit in 2026, she just went on to confirm that financial institutions are starting to come to the table at scale. And if you see the panel, right, she even has the CFTC chair, I'm pretty sure, sitting there on her left-hand side. She's got some other bank and institutional regulators and market participants there as well. So huge confirmation from a representative directly from Ripple that institutions coming in and is now on the table at scale. So that was the first video breakdown. I want to come over here from this announcement because this was huge. This week alone with announcements screams where we are headed in the digital asset landscape. We had this announcement directly from the DTCC where I said, the DTCC is expanding its partnership with Microsoft to further innovate and accelerate the delivery of its DTCC digital asset services on Microsoft Azure, right in the middle of a crypto bear market. Azure enables DTCC to design and operate digital asset platforms that can scale dynamically, support new market use cases, and evolve alongside rapidly changing technologies while maintaining enterprise-grade security and governance. The infrastructure is being built to onboard trillions. And you can see this announcement is just from 2 days ago, April 15th, 2026. So, take into consideration that these are the types of announcements that are coming out from the DTCC. While we're hovering around 2 point whatever trillion dollar market cap right now, this screams opportunity long term. Okay, so I just wanted to bring that to the table because that's going to go hand in hand with all these little tiny announcements that I'm going to show you guys via these panelists. So here, first, we have Larissa Moreira, probably butchering the crap out of her name. She is from Itaú Unibanco, which is the largest banking institution in Brazil and Latin America, with a total amount of addressable assets of around $545 billion. And she was sitting on a panel discussion just a few days ago and confirms this. Take a second and listen.
I believe that the main thing when you think about when you move from myth to transformation as a bank, in the early days, we always think about crypto as an innovative thing and POC or experimentation process inside the bank. But when we moved from that point and we started to offer clients some products and receive some feedbacks of what clients should want and also what we have as a vision, as a futures of state of products as a financial institution, we realized that crypto moved from only as an investment and an asset itself to possibility to use as infrastructure. So that's why I believe that mainly the main events that we participate in the last, 3-4 years become huge like this. So it's an opportunity for us to see crypto not only as investment, but also to an asset to transform the banks and the financial system, not only in Brazil, but also in other.
So she said word for word, this is an opportunity to see crypto not only as an investment, but also as an asset to transform the banks in the financial system. And considering that that's coming from the largest banking institution in Brazil, I thought that it was necessary to add in to this particular video breakdown, right? Again, we are sitting at $2.5 trillion market cap. We've just seen a huge risk off past couple of months. You couldn't scream opportunity louder than what she just said, right?
Yeah, that's major, bro. Brazil too. Damn.
Yeah. So that was a really good panel discussion. There were so many gems in that one, but we'll move on. Now, this guy here, this is Ben Z. He is the co-founder of Bybit. And here he talks about the Clarity Act and how he believes that the moment that we see clarity, we will see massive, quote unquote, buying power from these traditional financial players. So take a second and listen.
And all of that. Our hope is Clarity Act I think that would mean a lot. When it comes, like we talked to Goldman, we talked to JP Morgan, one of the biggest challenge is they're on their own book, they cannot hold crypto because there's no clarity on what's the classification of Bitcoin or Ethereum. Is it a security? Is it not? But the moment Clarity Act is released, I think we'll see massive buying power from these institutions, truly from the US. So far, they haven't really started yet because there's no clarity. Yeah.
So
He said from the US as well, bro. Damn.
And he also said we're talking to asset, we're talking to JP Morgan. I don't remember what did he say? Morgan Stanley said something, one of the two major financial institutions. He said we're talking to them and they have not started buying yet. When we get clarity, we're going to see massive buying power.
Yeah, bro. If this isn't this is so bullish, bro. This is so bullish right here, bro.
I mean, that is now confirmation. Bybit, of course, being one of the largest exchanges in crypto, largest financial institution from Brazil, the DTCC announcing all this stuff. I mean, the list goes on. I got more. So this guy right here from this Real World Asset Summit 2026 that took place. I don't remember what role this guy plays, but just listen to him, how he talks about how everything will move extremely fast. And he mentions that we will go from 0 to 100 really quickly.
Freely to whatever chain you see an opportunity or where you can work on an integration or have a different use case, then that accelerates the distribution and it unlocks utility.
I think we're getting there though. Like slowly,
Yeah.
we're progressing towards that point, and it's definitely interesting to see. There are things that happen quicker, things that happen slower. RWA is definitely be on the slow side so far, but I do think it's going to be kind of like a 0 to 100 situation. As soon as we crack it, and as soon as we properly lay down the railways under which all of those infrastructure move, it's hopefully going to happen very quickly, because I do strongly believe that the way we are approaching RWAs today, it is a strictly better form of technology than how it used to be done before the existence of crypto. So I'm a big supporter of the better technology will win. So it's just a matter of when.
Absolutely.
So this dude's credentials are in the background. He's sitting next to Tom Willer, Chief Product Officer at Stella Development Foundation, head of EMA Layer 0. This is the co-founder of USDTO. And he said that as soon as the railways are laid, we're going to go from 0 to 100 really quickly.
He said that with a pair of Yeezys on stage. This dude wearing Yeezys right here, bro.
Yeah. Man, I mean, biggest organization in financial history in terms of profit margin compared to employee count. So I'd listen to what the heck they have to say.
Facts.
All right, so moving on, just to show you guys. So those were just some net announcements from panel discussions that I had captured in the CYPRX research Discord from all the panel discussions that the CYPRX researchers share. But I wanted to also throw in some fundamental developments that myself and Aqua have been screaming at the top of our lungs, which is that institutions are not just going to buy into this digital asset ecosystem and put crypto in cold storage wallets and just let it sit there hoping for price appreciation. They are going to need a foundation, a venue for them to put their digital assets to work. And in real time, this week, we are seeing these types of announcements break left and right. So this was from FinTech News in Singapore, where it says the new features that Fireblocks released gives clients a way to earn on idle stablecoin balances through on-chain lending without leaving the platform. And it's this Fireblocks Earn Yield platform that they just recently launched. So coming over here to the announcement, this was huge, right? This is just from the other day. You can see April 16th, 2026. And it says Fireblocks has launched Earn, a native on-chain lending feature built into its enterprise platform that allows institutions to supply stablecoin balances to lending protocols, targeting capital that often sits idle between deployment cycles, settlement windows, and operational holds. The launch follows a year where Fireblocks processed $6 trillion in stablecoin transfer volume, up 300% year on year in an increase, and it's across its 2,400 institutional clients. They can also now access Aave, a protocol representing roughly 60% of market activity and the majority of on-chain stablecoin borrowing. Both protocols are accessible within the Fireblocks environment, maintaining institutional governance over decentralized finance operations. The launch includes a cultural vault from Centura, powered by Morpho, an infrastructure layer designed for managed, accountable access to professional capital. I'll let it breathe, Aqua, if you have anything to comment on that.
Nah, I'm good actually. I don't have nothing. My bad, bro.
So back to the beginning, to full circle this, because it mentions this curated vault from Centura, powered by Morpho, and then it also mentions Aave. Aqua, if you don't mind, could you pull up the Aave protocol real quick so we can show that they have access now, these institutions, to RLUSD stablecoin yield? And if we go back to remembering what this lady here said, right? This is the lady from Ripple, because I always like the full circle of my presentations. She specifically told you guys that institutional interest in their ability to embed themselves into the DeFi ecosystem is finally on the table. It's here, okay? And she's from Ripple, and she is talking about RLUSD and how these institutions can utilize it as collateral now. And so we're seeing this announcement from Fireblocks, where now these institutions, 2,400 institutional clients, can now lend stablecoins directly on Aave and through Morpho. And if we come over here, what just recently announced with Centura, what did they launch? They launched this RLUSD vault on Morpho, where now these institutions can come over to this DeFi protocol, right? And they can earn yield on their digital assets. Aqua has the Aave platform pulled up right here. And how much yield can they earn on their RLUSD?
4% by supplying it. And if they borrow against it, they're going to earn as well 3.66%.
So huge nomenclatures, that are being laid. The foundation is here. I cannot stress enough that if you guys aren't paying attention to how to start to earn yield on your digital assets, trust and believe these institutions are for an absolute fact, and the proof is in the pudding.
Let's get real. Like, this TVL is $364 million. This is not retail, bro. Let's get real. It's not $364 million that belongs to retail. I think not.
Yeah, it's definitely smart, more sophisticated investors are starting to dip their toes in the water, and it's only going to continue. Over the past couple of weeks, since the beginning of April, XRP has rallied over 17%. We went from $1.27 at the beginning of April, now trading at $1.50, as we are starting to see DeFi developments pick up at pace on the XRPL. And again, something that myself and Aqua have been screaming at the top of our lungs is DeFi developments. So just to show you guys that, going back at a previous historical tweet, this is from July 15th, 2024, where I said, last bull market, XRP and a few others had no DeFi ecosystem helping boost momentum like ETH did. That has all changed now for the first time ever. You've seen nothing but DeFi developments on the XRPL. Buckle up. This ride will be different, utility bull run or not. The DeFi ecosystem alone is going to scale over the next coming months. And now fast forward, we've seen this announcement here from Soil, whom we know myself and Aqua have gone over this platform. It is the first regulated DeFi protocol on the XRPL, where you can go and you can earn 8% yield on your RLUSD. And they also have curated XRP native vaults coming soon. So in this post, they said 63 billion XRP in circulation, 256 million in DeFi. That's 0.4%. 99.6% has no yield layer. I need you guys to understand how massive this opportunity is, because if just 50% of that 63 billion comes over into DeFi, XRP's price is going to do freaking numbers. All these numbers, these bullish price predictions that everybody has been talking about because of theories and oil price and the yen carry trade and all this bullcrap that people have been speculating on, XRP's high priced, all that's garbage. What is going to actually bring value to XRP's price? One of the primary things is its DeFi capabilities. And so it says here, meanwhile, $1.57 billion in tokenized real-world assets already lives on XRPL. The infrastructure is here. The yield layer wasn't. Soon. Period. Right?
Damn, that was from today.
Today.
Sheesh.
Today, bro.
Dang.
You know. So when we see more of this TVL that is in the XRPL actually move from idle
Yeah.
to active,
Yeah. 100%, bro. 100. Hey, wait a second though, too. The amount that it says here in escrow, 36.9 billion. Is that what's that's what in escrow on the XRPL? That's not like just soil, right? Like this is the XRPL chain.
I believe these are the XRPL numbers, yes.
All right. Yeah, then I got a little bit of money locked up in escrow then on this number. Yeah. The Zayman wallet. I don't know if you rock with the Zayman wallet, but in the Zayman wallet, you could lock up your money in an escrow account for a certain amount of time, and then it'll unlock and basically just appear on the unlock date in your Zayman wallet. But yeah.
You know, and if anybody understands DeFi, you understand why ETH price is the way that it is. We covered this so many times in previous videos. I feel like we beat a dead horse when we say this, but the TVL on ETH and the TVL in DeFi on ETH is night and day difference compared to XRPL. And so if even just, honest to God, even if just $10 billion of the market cap of XRP goes from sitting idle in cold storage wallets or on centralized exchanges and becomes active in the DeFi ecosystem, that is going to do substantial numbers for XRP's price, right? So make sure that you are paying attention to these types of developments in the coming days. We've had this announcement from Evernorth where they said today a new document has dropped for XLS 100 smart escrows on the XRP ledger. If you've been watching the XRPL evolve beyond payments, this is worth paying attention to. And myself and Aqua have been screaming that Ripple's whole entire focus shifted from cross-border payments to institutional DeFi 2 years ago.
Yeah.
Right. And if we come over here, it says the community has long emphasized settlement efficiency. The next metric is capital efficiency, word for word, right? So this isn't coming from retail investors' perspectives. This is coming from the largest digital asset treasury on XRP, where they're now talking about settlement efficiency. That's old news. Now it's about capital efficiency. It's about putting your idle digital assets to work. XRP's evolution from a bridge asset to productive collateral is well underway.
Yeah, bro.
So
bigger and brighter days for XRP coming soon.
Way bigger and brighter days. 23 hours ago, they put this out on their LinkedIn profile. XRP is evolving beyond its role as a bridge asset with capabilities like on-chain lending, collateral frameworks, and programmable liquidation. XRP can begin to function as productive collateral. And this is from 23 hours ago. Backtrack to 2 years ago. Myself and Aqua were telling people that this was going to happen.
Yeah. Yo, this is so crazy cool. Man, we've been spot on, bro. We've been so spot on. Sheesh.
So I want to read this document that they put out on their LinkedIn profile. It's actually a very interesting document from XRPL Commons. The font might be relatively small for you guys, but this will be the last kind of portion that I have from XRP announcements before the last two. It says, the XRP ledger is entering a new phase with new features in the works that support lending and more advanced financial tools at the protocol level. XRP is evolving from a bridge asset into productive collateral. This will help power loans, support tokenized assets, and provide liquidity across the ecosystem. That's a big shift. A bridge asset helps interchange one token for another. Productive collateral underwrites an entire financial system. Today, the global capital markets run on collateral. U.S. Treasuries alone total more than $30 trillion. These asset-backed loans, trading activity, and liquidity across markets. Without collateral, markets stall. Take lending, for example. As it becomes more available on the XRPL with rules enforced automatically on-chain, the XRP can begin to play a similar role inside the network. Loans can be secured, tokenized assets can be backed, liquidity pools can deepen. And then it says capital formation on the XRPL ledger has been increasing and demand for more sophisticated on-chain tools growing alongside it. Daily transactions on the XRPL recently reached a 13-month high, averaging around 1 million transactions per day. Meanwhile, in the back half of 2025, XRP-based ETFs exceeded 1 billion in inflows. This evolution can transform XRPL from a payments network into a capital market, and capital markets need capital that is steady, long-term, and thoughtfully managed. XRP holders have historically had one option: hold for appreciation. Look at this. This is crazy. On-chain primitives change that equation, again, with lending as an example. When loan terms, collateral requirements, and liquidations are facilitated through code, risks become more programmatic, observable, quantifiable. That kind of visibility is what larger institutions look for. At Evernorth, we see this unfolding in a few ways. As the financial world continues to move on chain, including treasury funds and real world assets, more assets are being tokenized and settling on the ledger. When this happens, liquidity becomes critical. Tokenized markets only work efficiently if capital is pooled at scale to support trading, lending, and settlement. Deep liquidity tightens spreads, improves execution, and stabilizes markets. That's where XRP, stablecoins, and other liquid assets shine. They can be deposited into on-chain lending markets, liquidity pools, and automated vault strategies. These vaults allocate capital to where demand already exists, generating yield from real economic activity within the ecosystem. Aqua, bro, does this not sound like everything that we've been screaming in Wealth 28?
Yeah, 100%. And telling people that your assets should be doing much more than just chilling in cold storage. And this article is saying that exactly, like the mindset of your average XRP holder. But yeah, this is massive, dude. Like Soil at the end of this year, because I feel like they're going to launch XRP Vault at any moment, I would imagine before summertime. But yo, I wouldn't be surprised to see, yeah, man, like
$1 billion sitting on
yeah,
Soil?
yeah, I'll say $1 billion, bro. I'll say that. Yeah.
I mean, considering it's the only regulated platform, I don't see why not, because then that means that every other platform right now, until verified, is unregulated.
Yeah.
They might
bro.
be compliant with regulations, but if they're not regulated, then yeah, a lot of that capital that's sitting in XRP is going to come to Soil. To finish this off, it says, in this cycle, XRP evolves from an elegant money transfer assets into a foundational on-ledger capital. A governed digital asset treasury helps scale and stabilize that system. It says, and as liquidity increases, more capital can be productively put to work. So I'll stall it there. I think that this is just such a phenomenal read, something that myself and Aqua have been screaming for the past 2 years now, and so many people have been neglecting it. Learn how to get your digital assets working for you. Learn how to be a liquidity provider. Learn what a liquidity pool is. Learn what digital wallets are. You guys can always tap in with us in the Wealth 28 Club. Go over the course material. There's like freaking probably over 200 video breakdowns now, just going through the DeFi ecosystem. You don't have to deploy your capital. You don't have to go out and use your XRP yet, but learning this stuff is so important for your future. It's not even funny. All right. So the transformation is happening. Everybody that, in my personal opinion, was screaming high end XRP prices before because of cross-border settlement and it being utilized as a bridge asset, that whole entire thing, it's not over, but there needs to be another aspect that drives demand for XRP, and that aspect is going to be collateral. It's going to be lending, borrowing, putting it to work, and that is happening in real time as we speak. Last but not least, to end this here, we had this announcement from VS1. This was from yesterday. They said VS1 is building on the XRPL, exploring how they are able to apply single asset vaults and lending protocols to enable bond tokenization, going beyond simple credit use cases. To save time for the length of today's video breakdown, I'm not going to read thoroughly through this, but it talks about what VS1 is building on the XRPL, talks about lending, borrowing, asset vaults, lendings, protocol and amendments being activated on the XRPL mainnet. So again, this just goes hand in hand with what we just showed you all, that there are active participants now building these things out because of the new features on the XRPL that have been recently announced, right? Like XLS 65, XLS 66, so on and so forth. Okay.